Hey Coconuts, welcome back to our Tuesday's weekly market updates with me, Rakesh.
And Anthony.
Awesome. And this week well, in all fairness, it was a pretty slow week. right
Yeah,
until right until yesterday.
it's just Thanksgiving and Americans, well, I guess not wanting to create news in a short week. But we found something to talk about. Thanks to COVID.
Definitely. Definitely. So for starters, we're gonna bring up Omicron. I believe that's the correct way to say it. And all the uncertainty it's been causing this past week.
Yep, and of course, if we talk about COVID, we can't not talk about Zoom. So we'll talk a bit about their earnings and a bit about what has happened in the past few days as well, just for Zoom.
Definitely. And then we're going to move on to Nissan with regards to our EV talk. We have been talking about that the past couple of weeks, so it's good to see what Nissan is doing.
And lastly, hot off the press, Twitter CEO Jack Dorsey resigning, right? End of an era there for Twitter.
Definitely, but maybe a new one for Bitcoin, huh?
We shall see.
Anyways, we'll get to that. We'll get to that. So all this and more juicy news this week. Just before we start, if you haven't, followed us on Twitter, actually, I don't even think we have Twitter. If you haven't followed us on Instagram, on Facebook, on YouTube, please go ahead and do so. We have a Telegram group, so just go search for it. You can always email us. We'd love to hear more about it. Just email us at hello@thefinancialcoconut.com so that we know what to talk about so that you will listen. Awesome. All right. So for this week, Anthony, we'll start off with Omicron.
Yes.
I guess it's oh my God. Yeah, exactly. And then we found out that we actually aren't the only ones talking about it. It's all over. Every single person is talking about it, including our best pal, sister company Reggie. We are taking a little bit of a spin on it, though. I mean, and one of the things that we want to talk about here is the fact that Omicron is really uncertain, right, in the market, and that's the way that I see it, Anthony. It's everybody's trying to open up, right? In Asia, everyone was trying to create these sort of vaccinated travel lanes where you don't have to go ahead and quarantine. When roughly 70-80% of the population has been vaccinated, and we're trying to open up to the market as well, mainly because we haven't had a very good 2 years. However, this Omicron stemming from South Africa now traveled to Hong Kong, Australia, even touched Singapore in transit, and of course in Europe, is causing an uncertainty because of the vaccination. What do you think about that? I think firstly you're on mute.
Terrible. Yeah. So I mean, look, I think this is really about the context, right? We have had COVID. We have kind of gone past that. We have had Delta and kind of gone past that. This is just never ending on a personal level. But yeah, I mean, look at markets. Markets have been insane, right? It was designated, I think, a variant of concern on Friday, US time, which was just after the Thanksgiving holiday. Half-day markets in the US it collapsed, except for Zoom, naturally. But we'll talk about that. And on Monday, which was yesterday, that being when we are recording this, it went up again, right? So
Yes.
it's very fluctuating. There's a lot of hot air about what the strain actually does and what the effect could be. But I think that the science is out, and because the science is out, we don't know how we will deal with it.
No, fair enough, right? And I think one of the things that got concerning was the fact that the vaccines were only like 40% effective. And I presume,
Well, we don't know that yet.
It's being tested.
Yeah.
Obviously, we don't know. Wasn't it Moderna, sorry, saying that they could trying to come up with a vaccine for Omicron by next year or something like that?
Yeah, they were trying, I guess, to be a bit reassuring and say, oh, we can start development in 6 weeks and we should have a new one by next year. But really, they don't know, firstly, what the efficacy of current vaccines are for this strain. And, because of that, whether it's actually required, I think it's slightly self-serving because he wants to sell drugs, right? He needs business. But I think, honestly, it's a bit early. let's wait for the signs to be more certain, and by then the markets will have a clear reduction as well.
Yeah, and I guess that's what we're here to talk about, right? This sort of uncertainty because science is not really certain. Everyone is still trying to just close their borders, trying to sort of get what they have and sort of hedge and not try and get this virus back into their country where they've been trying to stabilize hospitalization rates is causing uncertainty in the market. People aren't really sure what's going on, plus and minus. Obviously, we saw the stocks drop, literally giving us a roller coaster ride this past couple of days. But I think one thing to note here was that not only did the pharma stocks drop, everything dropped, right? Which
Yeah.
is quite weird.
Well, zoom to the opposite roller coaster. So when everything was dropping, it was rising, and when everything rose yesterday, it dropped. But this is what I actually wanted to talk about, right? The first order is simple, right? New COVID strain, we are all going to lockdown again. It's bad. Travel, tourism, all of that going down the drain, right? Retail, that's
Absolutely.
all gone down the chutes. Interestingly, at least last Friday, what also dropped was your small and mid tech companies, right? Your
Mm.
Twilios, your Shopify's, Amplitude, they dropped as well. And I mean, if we are going to a lockdown, we are closing down again. My intuitive take on it is that our tech should go back up, adoption increases, right?
Hmm.
Your multiples expand, but it fell. So I don't know, man. We need to find a reason for this. Do you have any
Absolutely.
thoughts?
I mean, my thoughts here is that, just people are uncertain. They rather just hoard the cash. And I think, one thing that we all know is that there is a lot of liquidity in the market, right? Literally prices are going up, up, up. If they miss earnings, they go down dramatically and then they go back up again because people are literally hoarding that cash. And are they uncertain that they should just hoard the cash, right? I think, yeah, I think that's what my take is for this. What are your thoughts?
Yeah, that makes sense to me. I think it could just be taking profits, taking some money off the table. I don't know if that's enough to cause the magnitude, but I guess people are just lighter on the trigger finger nowadays. Yeah. So, but if that's the case, in this situation, what would you do? What's the play here?
Yes, that's a very good question. My take is to wait it out. I think if you're already in and you're making a loss, you should just hold. I feel that it's a very good time to also capitalize because just like what you said, Anthony, right? The small mid tech, the HubSpots, the Sprout Socials, the Amplitudes, the Twilios, these
We are
should
all
be
just naming our
skyrocketing.
book here.
Yeah.
We are all just naming the shares we own.
Yes. We are together with these smaller tech companies and growth stocks. They should not be affected by this delta strain. They should be positively affected, actually. And the fact that it's down could be a decent arbitrage, in order for you to go in and take a look. Like a simple example would be HubSpot just dropped $100 last week, right? And that's quite a lot of money because it's made that back up yesterday. So that's always something to look at in terms of a dip, right? If you
Yep.
have spare capital to go and go in again.
Yeah, I think that's right, right? It's fundamentally about spare capital and about having confidence in the business of the company to
Mhm.
continue growing, right? That's where you look to allocate. You don't buy anything, right? And I think also that if it's spare capital, it has to be capital you don't really need because this roller coaster will go on for quite a while yet. So it has to be at least a midterm, 1 to 3 year hold. It's harder to trade in and out with confidence, I think. Or at least that's not my mentality. So I always find it hard to take that 1 month and make 10% and then run away. But yeah, I think different people have different approaches. What I would say is, if there's spare capital, honestly, I would put it in Nasdaq. I'll put it in big tech, right? In uncertainty that there's flights to safety and and
Mhm.
Fang M or Mama Tan or whatever the new acronym is nowadays. It's they are the safe harbor now, right? It's not your Pepsi, it's not your Shell, it's not your old school defensive companies. Allocate to big tech. if you think there's a downturn, allocate to Berkshire. He will know what to do with your money, and if not, he'll do share buybacks to give you some return. I think that's safety to me in the equity space, because you can't do bonds, right? Yields are relatively crap for now. So yeah, it's just looking for relative safety, I think, within the space that we have.
Definitely. And of course, to our coconuts out there listening, this isn't the only factor, obviously, that goes with what happened last week. I'm sure there are a lot of other factors as well. They were talking about the Fed trying to increase rates. To find out more about that, please go ahead. We do have Reggie actually did a really good podcast. Was it a couple of days ago? With regards right on the main feed, I think it's TFC Financial Podcast. Go ahead and listen to that. He talks about the Omicron virus. He does refer to it as Omicron, though. So don't be alarmed.
Terrible.
It's Omicron.
Yeah, it's the same. It's the same thing. It's not a new company. Yeah.
Yes, exactly. It's not a transformer either. But go ahead. He has some great insights there. Please go ahead and listen. It's roughly about 20 minutes or so. Awesome.
Cool.
So yeah, I think riding that wave of COVID, why don't we talk about the next topic, Anthony?
Yes, let's go to Zoom and we can look, in a bit more detail as their roller coaster ride, because I think that was quite amazing. Just in terms of price action, what they did, they did announce earnings, I think, on the 22nd or 23rd November, a week back. It dropped pretty much 15-16%, right, after earnings. They didn't miss earnings, they just dropped. Omicron announcement came, it rose 10%. Monday was a risk on day in the US markets. It fell by another 10%. So we're back kind of where we started, but with a lot of volatility around. But let's leave that aside for a bit and look at the business. Yeah, because I think that's where we want to focus on, and if we are going to be more patient and do slightly longer term investing, right? And hopefully beat the market that way.
Well, hopefully value investing.
So, yeah. My speaking to my heart, even though it's a tech company. Yeah. Yeah. Hey, look, right? I was gonna say it's price to sales now. It's 15. It was 30 to 60 pre-pandemic. You look at that business pre-pandemic, look at the business now. There's no reason for the multiple to be so low, right? But earnings, first earnings, right? Earnings, they grew revenue from third quarter last year, which was already a bumper year, by 35%. So context, in from Q3 2019 to 2020, they grew by 360%. And from Q3 2020 to Q3 2021, they grew by another 30%. Right. So yeah, it wasn't 100 times. It wasn't 100%. It wasn't 200%. It was a mere 30, but that was already a huge base, right? They have literally five times their revenue in 2 years. But obviously the market didn't like this. It dropped, right? There's still some customer growth. It's a lot slower. So the customer growth grew 18% year on year. Interestingly, right, a lot of the churn were in the smaller accounts. So customers with contributing less than 100K in revenue shrunk, but customers contributing more than 100K in revenue actually increased by about 94%. So
wow. Okay.
So yeah, number of customers.
They're actually targeting the bigger and trying to retain the bigger clients, obviously.
Yes, and that's the thing that I think a lot of people are missing, right? Zoom is an enterprise company. They were an enterprise company pre-pandemic. They just happen to have this brilliant retail product that everybody needed to use, and that's why the perception is that they are a retail facing company, but their genesis has always been enterprise communications, right? The founder was from Qualcomm, lots of them around now, but he knows his hardware, he knows his tech. Other than that, what else is there? I like free cash flow companies. I like profitable companies. Zoom is one of them. They had in one quarter free cash flow of 370 million plus. They have 5.4 billion in cash. So well capitalized, not much debt. Able to expand, especially given their size, right? But
nice.
Of course, markets.
Did their FCF grow from quarter 3 last year, or from last quarter, or anything like that?
It grew, but like 20%, right? It wasn't fantastic.
Wow, that's
Again,
good.
compared to 300%, yeah, they held margins, operating margins great. Whatever reason, just because it was 300% last year, 20,
Mm.
30% this year, the market just thinks that's terrible. I mean, I don't know, right? That's illogical to me.
It could be that sort of like fad that they think, oh, everybody's using Zoom, I better buy Zoom, but now we're using less Zoom, so we shouldn't really. But really, the corporates are the ones actually buying it and increasing in their portfolio,
Yeah,
where the money actually is, right?
exactly, right? So, I personally slightly oversold, right? I bought more, I think
Mm.
just after earnings, right? It's
Nice.
a loss, right? I've not bought a lot, and it's a loss, but it's averaging down. I think it's now a decent time, right, to look at it in more detail, right? And again, we go back to the thesis. What is it? It's enterprise communications. What do they have? They have their audio product. They have events, Zoom events. They have Zoom phone. They are trying to
Mhm.
replace your telephony system in offices. So your Cisco, handsets, all
Yeah,
that, they want to replace that, right? Of course,
very
the
cool.
big elephant in the room is Teams, right? Because Teams can do all of that as well. Right.
Yes.
So yeah, I think that's the big headwind. But just looking at the growth, just looking at how they manage to retain and expand on and make existing customers spend more, I think that this could be a punt worth taking.
Got it. And I think for our listeners out there, how does this compare to Teams? Because with Teams, it's also very much in the enterprise space. I think enterprise
Yeah.
space. I think we know this. It's by Microsoft. If you're on Azure, if you're in their ecosystem, you're probably going to get Teams over Zoom. How would that? How is Zoom taking that, right? Because as far as I can see, and correct me if I'm wrong, Zoom was, yes, it was always an enterprise play, but it benefited from COVID because it could hit
Mhm.
these SMEs, it could hit these individuals. So just like what the market is trying to say, which is that less individuals might be using it, how would then go back to that first question, which is how is it different from Teams and why should we go for Zoom?
Okay, one, I think product functionality. Okay, my wife will kill me, but I don't think there's much difference in Microsoft Teams and Zoom. I also own a lot of Microsoft, so that's by
Right.
the by, right? Either horse wins, I win. But I think the reality is that there are a lot of companies using both ecosystems. So Microsoft pushes Teams very hard. They give it away free, literally, to everybody.
Mm.
That was part of their plan to defeat Slack, right? Who obviously got acquired by Salesforce. So
Yep.
it's I think there can be differentiators for Zoom. So for instance, a few months back they tried to acquire an automated call center company called Five9, right? So you could get Zoom phone and they will give that service about automated responses, which if you ran a call center would be extremely useful to you, right? And your customer service would be great. Unfortunately, the acquisition failed, but
Mm.
that to me is the thinking behind it, right? They have a communication system. They're expanding it into making hybrid events work. They're expanding it maybe into the metaverse and having avatars. They're expanding
Mm.
it into enterprises and different enterprise use cases, right? And so
Interesting.
I think that there's the opportunity there, right? They're building the stack out slightly differently from Microsoft, where it's just about communications primarily. It's not so much about events and hosting good events. It's not so much about providing voice solutions, right? So I think that there's a difference there, and that the Zoom team executes well, right? Their net earnings retention per their net dollar expansion rate is like 130%. So, and that's for the past 2 years, 3 years, sorry. So
Interesting.
essentially, if you're a customer that spends $1 with them, on average next year you'll spend $1.30, and
Let's
after
see.
that you'll spend $1.69. So
That's
revenue is
great.
per customer is expanding very quickly and retaining very well. So I think we just need one catalyst, right? They get a good acquisition in that differentiates them, quite cleanly and neatly from Microsoft Teams, and that increases the attractiveness to a certain subset of companies.
Cool. No, I think that's a fair play. Again, listeners, coconuts out there, the good takeaway here is the multiple, what is it, price to sales at 15 is what you
Yeah,
said, Anthony?
15. Yep.
Yeah, when it was 30. Right. And actually
Pre-pandemic,
most
right? Without all the growth.
pre-pandemic. Exactly. And now it's 15. Is it too much of a sort of underrated stock? Is this a good time to go in? Given that, and my take is that given that they do have FCF, they do have quite a lot of cash, that's enough for them to either acquire or even start something new and try something else.
Yeah.
I feel that Zoom, because this is what they focus on, unlike Teams. Teams is part of the ecosystem, so they're not really going to change Teams much. They're going to change the other parts of the ecosystem, right? But Zoom is able to then pivot, expand into these different segments where I feel could be good growth. The only question here is, what are those segments, and will it be good? Right. So
Let's
I
send
think
that to Reggie and Tom for a stock geek out if they haven't done one already.
that's true. That's a good one. Definitely, coconuts. If you do want to know a bit more about Zoom, please let us know. We're happy to do a stock geek out. We can just put our boy Reggie on it. So yeah, that's always good right here in this podcast. Awesome. No, that was a good topic. Moving on to one of our other topics, which is Nissan, right?
Yeah.
So I read a
How to
news
talk
this
about
week
Tesla without talking about Tesla.
about that is true. All right, but no, now to the big car companies, been around for ages. They're looking to ramp up their EV production, right? And roughly about 17.6 billion in the next 6 years or so. So that is quite a lot of money. Not only that, they're partnering with big guys, right? So they're partnering with Renault and Mitsubishi to increase batteries and create their own batteries and create battery life in their EV cars. And they're looking to literally create that pack and make it sustainable and a lot easier for anyone to own an EV car and not always look for a charging port wherever they go. Maybe even have to recharge as they drive up and down the state, right? So I think that's something good. And obviously you mentioned how to talk. Nice to talk about Tesla without talking about Tesla. That is something that when we did talk about Tesla, is something that we brought up, right? The fact that Tesla, yes, they're good. They're at the forefront of it. Elon Musk has a cult following, which is why the stock price is like this. But as soon as the big guys put their foot in, it might be difficult.
Yep.
And the way that I see it here, and love your take on this, is that the big guys are coming in, but they're coming in as a pool with other big guys.
Yeah. Yeah, well, I mean, they are both competing and not competing, right? I mean, what we talked about Rivian the other day with their Ford investment as a 12% shareholder, with Ford also being a competitor and creating their own trucks. So I mean, yeah, the car manufacturers seem to be partnering with each other only in specific aspects, and I think for Nissan, Renault, and Mitsubishi, it's largely centered around the battery technology,
Batteries.
right? But of course, each car brand retains their own separate branding, manufacturing lines, and all of that. And well, I mean, if it works, and if it's and if it comes together, I think that's great for EV adoption, right? Leaving aside the company, and that's just because having common standards, being able to use one charging point for multiple vehicles, unlike Tesla, where you can only use a Tesla charging point for Tesla.
Yes.
Being able to swap battery packs out, having common parts for repair. That works, right? That's efficient
Absolutely.
supply chain. Yeah,
Yes.
so I think
and
it's
cheaper
good for
maintenance
adoption.
costs. So.
Yeah, exactly. So we can't all be Apple. Let's be Androids and use a proper USB and USB-C standard compared to Lightning.
Yes, they do it. Well, they are moving to USB-C, but anyways.
Yeah, exactly. Right. Common standards win, or common standards should
Yes.
win.
Absolutely. And I think that's one thing I do want to focus on, right? Yeah, we all know, Nissan is building out this EV thing, but the battery space in EVs specifically is quite a good space to be in. And I've been trying to do some research and finding out more about these batteries, who's trying to create them. Has it been, each car company has its own, and it doesn't look like it, right? Which is where I stumbled upon this news. In fact, something like 5 companies in 2020 supplied 87% of the batteries in passenger EVs last year. That's insane, right? Of course, one of them is Panasonic. We have LG, Samsung, basically a lot of the Koreans, but
Yeah, actually, yeah,
um,
they're all Koreans. Something.
yeah,
Now that we are looking at the list.
yeah.
All
Here we
right.
are. So, my question here is, yes, we're talking about EVs, and there's a lot of talk about those, but should we be, just like we did last week with Nvidia or Nvidia, could we be looking at these battery companies and go, you know what? Let's invest in them, and if EV wins the industry, we all win because they'll be supplying these batteries.
Yeah, I think my concern, and this tends to be my concern is, battery tech, at least to my understanding, it's really really new in that sense, right? A very big drawback of EVs have been that the lack, as compared to ICE vehicles, has really been the lack of energy density, which means that the battery pack either needs to take up a lot more space to travel the same distance, or you have a much reduced range, right? And
Mhm.
yeah, so these companies are the leaders in the current tech that is serviceable, right? But we are hoping for improvements in range. As you said, Tesla, I think their current models use Panasonic batteries, but they're trying to create
Mhm.
and come up with their own, right?
Yep.
Tesla went to the Western Australian government and said, "I'll build you a battery within like 90 days," for instance.
Mm.
And if I don't,
Yes.
I'll pay for the whole thing myself. It's
Yeah.
ridiculous. But yeah, not about Tesla, about batteries, right? So these are the leaders. I don't know if they'll be the leaders for the next generation of
Mm.
vehicles, right? So they could be, but there could be new technologies coming up with the startups, lots of battery startups, lots of hydrogen
Absolutely.
cells actually. They're not really batteries in that sense. In terms of nickel, cobalt, they use completely different chemistry. There's an argument about solid state batteries. I think it's an evolving space, right? So and I'm not ex- that sure that the current leaders will still be the leaders. So yeah, I think that
Okay.
definitely something to think about. Worth a punt, I think, for the smaller ones.
Yeah. Definitely. No, I think you bring up a good point, right? It's a little different to what we spoke about last week. Last week with Nvidia, we know that these are the guys that are going to go with it in the metaverse industry in Web 3.0. If they are looking at it, they need to buy these chips. Of course, AMD is another one. With this case, battery tech for me personally hasn't fully evolved since lithium ion, and that's been quite a number of years, right? So it's getting to the point where it needs to evolve, right? If you're a geek like me, I'm having dinner with a friend somewhere, and I say, you know what hasn't changed in years? Lithium-ion batteries, right? And then we have a half an hour conversation on why hasn't it changed. So I I completely agree on your take where things could be drastically different in 5 years from now. However, EV is coming in fast. Could it be a good punt that Panasonic or LG or Samsung could be the next forerunners? And if so, buy up these startups, for example, or buy the patent or anything like that?
Yeah,
Could be.
could be. I think it could be. I think another, I guess, risk to me is we look at LG, we look at, well, not so much Panasonic, like SK, Samsung. They are small parts of big conglomerates, right? I don't think they have spun out their energy parts to be separately listed, right? Unlike China, the
Yeah.
Koreans like to keep things within one umbrella. So if that's the case, yeah, you don't want to buy the whole Samsung just for batteries, right? I mean, they have a great
Absolutely.
chip space, but are they going to be great at TVs? Are they going to be good at fridges, phones? It's a bit too
Oh, the
spread out.
TVs are pretty
Um,
good.
yeah, I have one at home too. But 5 years time, are they still the leader? It's hardware, it's no margins. They might not want to do it anymore, right? So
Mhm.
I think that's also a bit of a concern if we are just going to buy the big leaders. I would be very interested actually if there was a battery ETF, right?
That's a good
So
one.
we know there will be a winner, right? There will be mass adoption. We want to be agnostic about who it is. We just buy an ETF that focuses on battery tech and hope. It must have a ticker of like BATT or something, and we'll get there.
True. Looking at it, LIT, I think is the ETF on it. I
Oh,
just Googled
okay.
it. There
There
might
is
be
one.
one. Yeah. I think, good for us to, the ticker is LIT. Yep,
Cool.
lithium
All
and
right,
battery tech
coconuts. You can check
ETF.
that out. If you
Definitely.
think our thesis works. Yeah. Other than that, I think you could be right. Lithium ion hasn't changed for the past few decades. Even though the composition has. I think
Mhm,
partially that's also because it's the most stable. So if we want to be a step removed, right, we just go buy the miners. You know, the minerals will be required. So
mhm.
highly unlikely to change. I don't know enough about chemistry to say that, definitely they won't change. But to me, that there's that certain stickiness. So after the last few decades, if there was going to be a breakthrough, maybe somebody would have done it already. There has to be a reason why it hasn't. So miners could be a decent play for the next few years as well.
Yeah, and maybe tell us a bit more. What do you mean by that? Like commodities that we should go into?
Yeah, well, I think commodities are. I'm terrible at commodities. I don't like them,
Right.
but I think that there's two ways of thinking about the. The one is fundamentally demand. Sorry, supply and demand, right? So to the extent that more batteries are needed, lithium is needed in all of them. Demand for lithium increases. I think the
Yep.
unfortunate thing for us as investors is that lithium is extremely common,
Mhm.
to the extent that you dig it up very very easily and you find it easily. So probably not the best material to use. But yeah, I think that's generally the train of thought, right? You look at what chemicals going into a battery, which of these are rare with constrained supply, and you just buy up the miners or the people who produce that chemical, right? And or that mineral, and that allows you to capture an outsized part of the value chain.
Got it. Yeah, coconuts. I mean, we've got some juicy tips here. Definitely have a look if you're into and looking into battery tech instead of Tesla or instead of Nissan. You could either go for that ETF that we spoke about. And we need to do more research on that ETF. I just found
Yeah.
it.
Yeah. You can buy
Or
STEM. They're also a battery company in the US, I think. They just
STEM.
listed
Got it. Or yeah,
STEM.
or
Go
look at
check it out.
like
Go do a read. I found it really,
definitely
really interesting. Which is why I
nice.
punted on them.
Yeah, so stem is one, or either that, or you go into the ingredients that you need to make batteries. Lithium could be one, nickel is another. I know, and I know that nickel has been rising actually quite a fair bit, so that could be something that you guys could look into as well. All right, last topic of the day. I think we'll move away from EVs now into
Right.
software, isn't it?
Social media and evil companies. So Twitter's kind of evil. They just don't make enough money to be really evil.
Yeah, yeah. Tell us, man. The big news last night, wasn't it?
Yeah, it was last night. I was hitting the bed. I was like, and I saw this headline pop up from CNBC. Oh, Twitter CEO Jack Dorsey resigns. Or steps down. Sorry, he doesn't resign. And I was like, oh, okay, cool. Rumor. Time to go to bed. But
Okay.
of course I didn't. I procrastinated. And the stock was suspended. I was like, oh, okay, must be something new. I woke up in the morning. I was like, oh, he really did step down, right? So to give a
Hmm.
bit of context, Jack Dorsey, we have mentioned him before as the guy with three jobs: CEO of Twitter, CEO of Square,
Square.
and yeah, Square and Bitcoin Schiller, right? And now he just has two jobs. CEO of Square and Bitcoin Schiller. Yeah, he's a he's stepping down as CEO. People are replacing him. The person replacing him is Parag Agrawal. He's the current CTO, been with Twitter for 10 years, started as an engineer. So nice story
Hmm.
there. And the new chairman of the board, interestingly, is this guy called Brad Taylor, who is the COO of Salesforce, a much bigger company, right? And
Hmm.
the COO, and now he's chairman of the Twitter board. So yeah, interesting times, really.
Wow. And why do you think he stepped down? What is some of your opinions?
Well, look, there's the well, I mean, he kind of gave an official reason, right? And he said, yeah, sometimes founders need to take a step away from the company for the good of the company and not their own ego, right?
Okay.
And that to me feels a lot like shade to Mark Zuckerberg. right? You have a founder
Right.
that slightly toxic to the company, bad rep. Maybe it's time for you to take a step away, not be CEO, and just not be the face of the company anymore, right? I know Silicon Valley has this huge crush on founder-led companies, right? Venture
Mm,
capitalists love that because it's their baby. They'll do whatever it takes. I think what's important is to have a good manager, right, and a good team behind it. Whether or not it's the founder doesn't really matter. Maybe being a founder increases your chances because you have been there since day one. But look, Satya is doing brilliantly at Microsoft, right? He's not the founder,
uh,
right? All
yeah.
companies have to go past that phase, and maybe this is the right time for Jack to step aside. I mean, Twitter's been doing really well. As a company, not as a stock. Stock is terrible, but yeah, as a company, I think they've been doing really well over the past few years. Past year, actually.
Got it. Yeah. I mean, I was reading as well. With we know Jack Dorsey is a big believer in crypto and Bitcoin actually, and he's trying to move. I think he's moving Square and Twitter earlier
Yep.
this year to move towards the cryptocurrency space. I did read an article saying from Twitter CFO going that we should not be in that direction. So it felt a little bit of a conflict there between the CEO and the CFO.
Yeah, well, the CFO is going to lose to the new guy because he's also crypto focused. At least from what we can tell. Essentially, when I think Twitter a month back hired a new head of cryptocurrency, who
Mm,
reported directly to the CTO, then who is now the CEO. So, I
right.
think that's a direction that they are not going to step away from, which is not too bad.
Yeah.
I'm interested to see where it goes.
Yeah, I think one of the news that got me was the fact that Agarwal is trying to, well, part of his role here is to try and decentralize social media, and I think that's very interesting to see where and how they're looking to lead that space as
Yeah,
obviously Facebook turns into Meta, but
they need to be they need to brand themselves a Web3 company. Then the share price will skyrocket and I will be able to buy a house. Sorry,
so I
I have
see
a
you're
lot
in
of shares.
Twitter as well.
Yeah,
Okay.
yeah. Twitter and Microsoft are big positions that I have.
Right. Got it. No, I think it's good news. At the same time, I think Jack Dorsey wants to, obviously with Square, he's still there. He's still with Bitcoin Schiller. He is quite a big crypto guy, right? So do you see him doing spaces in crypto, maybe, trying to do something with Bitcoin at this point in time, or just taking a step back?
I don't know, right? I think Jack is an interesting guy. I mean, you look at Twitter obviously had a lot of trouble politically, right? And you look at the
Mhm.
congressional hearings and you see Mark Zuckerberg dressed up like a robot in his shirt and a tie. And then you see Jack with his beard looking like a hippie and wearing his
Yeah.
rainbow t-shirt and you go, what's this guy doing, right? Dude, come on. But he's obviously marched to the beat of his own drum. That being said, product visionary, right? He's founded Twitter, he's founded Square. He clearly knows where things are going or where he thinks things should go. So, you know, exciting times, whatever next venture he has. I'm
Definitely.
relatively sure it will be a hit.
Yeah, no, I think that's completely fair. Maybe he's found a new project he needs to take on as well, right? So you never
Yeah,
never really know.
maybe he's Satoshi and he just decides, fuck this, I'm retiring.
Maybe. Awesome. But yeah, no, great news there. We'll see how that develops. Twitter, was there any we did that after yesterday after earnings call, was it, Anthony? So we didn't see any shift in stock price or anything like that?
Oh yeah, it was an interesting roller coaster. So no, it wasn't earnings. It was just out of the blue. I think the news, the rumor hit the market at about 9 or 10 US time, right? Eastern time,
AM?
and
Okay.
and it rocketed 11% up, right? And they suspended and they suspended trading. They made the
Mhm.
announcement, released the letters, etc. And Twitter ended the day down 2%.
Right.
So it went up on the news that Jack was resigning or was leaving because well he's a part-time CEO, we want a full-time one, and they
Yeah.
announced who the full-time CEO was and it just went all the way back down and some. So yeah, it's
Okay.
I have a penchant for stocks that are not loved by the market. But yeah, that's
No.
the price you pay.
Wow. Okay. Roller coaster. I think it's good to see how we are this tonight when it opens up in about 1.5 hours, 2 hours.
Yeah, no, it will continue dropping. It's just been on an awful downtrend, and nothing will save it until a year later.
Right. All right. So keep holding, huh, Anthony?
Yeah, I'll add to it. I'll sell some covered calls. I'm not far below my cost basis, so it's fine.
Oh, that's all right. That's not too bad.
No, not like
Awesome
Zoom. Zoom is
coconut.
just completely underwater.
Well, you're not in there, right? You're not in the Zoom, right?
I do. I just have a small position. But yeah,
That's
I'll continue averaging that, I think.
Yes. Now that it's only a 15 multiple.
Yeah, exactly. It's cheap. Come on, guys. Pump this
Awesome
with me.
coconut. Thanks so much for listening in tonight. We took up half an hour of your time, just over. Hope you learned a thing or two this week. We'll love to catch you next week as well. Hopefully I'll be on my way to Germany. We'll know more
Oh,
as
are you still going?
that skyrockets. Yes, at the moment I'm still going, but we'll see how this week pans out as well.
Right.
Awesome. Thanks so much. See ya. Bye.
See ya. Bye.